This is Cece. Welcome to the Orbit. It is Wednesday, November 15th. Futures are higher this morning, following through on the big rally we saw yesterday after a cooler than expected CPI number that was sort of completing the story that the market was trying to tell over the last few weeks. And that is a Fed done raising rates, inflation that continues to cool, a consumer that isn't necessarily going away, an economy that is holding up decently, a job market that is not that hot but not that cool, sort of a Goldilocks situation. And we sort of got the final detail yesterday with a confirmation that inflation was not reversing and ticking higher. So therefore, you've had yields lower the last week and a half. You've got stocks higher. You've got essentially the beginning of that year-end rally that a lot of people were hoping for, but a little bit more violent than I think anyone would have anticipated. And now, because we find ourselves in a spot where it's so far so fast, so we're looking at this SPY chart, I mean, just see that move we've made over the past 2 weeks. It has been clearly some investors got caught off sides, some shorts got squeezed, and we are now looking into a year end where the expected move is to the upside is now above that August high. The expected move is 462, 463. The all-time high in SPY is higher than that. It's about 475. But, as you can see, suddenly a new high on the year is a possibility, which didn't seem at all likely even a week and a half ago, 2 weeks ago. So with that rally has come a squash of volatility in the market, as we've been talking about on the Orbit. And what that means is that expected moves are very narrow. And, we've been saying this over and over and over again in a low vol, grind higher type market that we have seen over the last couple of weeks with these big moves every few days, like what we saw yesterday. Obviously, if you are selling options, if you are an options seller, and that is your general strategy, the risk has been to the upside. With this kind of one-way movement we've seen over the past several weeks, which really followed one-way movement to the downside over the prior several weeks, and you can see these moves right here on the chart, what we want to look at is a couple of scenarios. One would be for the people that are looking to hedge, maybe. They feel a little bit extended into year end on this rally. They're a little bit worried. Are there some low cost ways to sort of hedge this portfolio and not have to take profits right here? Are there some scenarios for people looking to just fade this move in general and looking to the downside for a reversal? Well, the good news there is that things are extremely inexpensive. And so let's go through a couple of scenarios and trade setups using debit put spreads. The first one we want to talk about here is an expected move debit put spread. This is expiring December 29th. It's a $15 wide debit put spread. So that's about how much the options market is pricing a move into the year end, either to the upside or the downside. In this case, we're looking to the downside as potential hedges or for those looking to fade this move. And the key point here is just how close this break even is on this trade. So this trade is risking about 400 and change to make just over 1,000 and change. And if you look at this break even, I mean, the SPY is 450 and a half, 451, and we are looking at nearly a 446 break even. So, SPY was up $8 yesterday. This is, about half of the move just yesterday. And so that's what you see when you see this VIX at 14 or 13. These are the kind of directional opportunities that provides, potential opportunities, because if you do get the direction right, the options are so cheap that you can create break evens very close to where the stock is trading. In this case, we're looking back to the downside, but the same thing applies to the upside. If you were to see a continued rally into year end, well, let's look at that. Let's look at what the call spreads would look like. And for some symmetry, we've got a $15 wide call spread to the upside. This is positioning for this rally to continue into year end, potentially taking out those August highs that we saw. And in this case, again, look at that break even, 455.80.